Hi, my name is Darren Joseph from HEJ.tax, and we're the team that seeks to demystify that sometimes confusing world of international tax. And today I want to talk about taxes in Portugal versus taxes in France. I always tell clients that when you're considering moving to Europe, you're making a decision to move to one of the most highly taxed and regulated jurisdictions on planet Earth. So if it is that you were pursuing a low cost or low tax jurisdiction, Europe is normally part of that conversation. At the same time, the clients that we work with are really prioritizing, to some extent, lifestyle over taxes. So they're not letting the tax tail wag the dog. And that's something that I'm really adamant about. It's about living your best life. And when you determine where the best life is for yourself, your family, for your business, for your legacy, then you try to create a tax plan that would optimize for that situation rather than the other way around. So when we're talking about taxes in Portugal versus taxes in France, the obvious answer is, of course, it depends. It depends on your situation. It depends on what your income streams are like. It depends on how your wealth is structured. Having said that, from a tax point of view, I just want to call out 6 factors for you to consider. Number 1, France, generally speaking, does have a higher tax rate for individuals than Portugal, all things being equal. But having said that, depending on your situation, if it is that you're moving to France, for example, to work for a company, a subsidiary of an international group sometimes, then you can benefit from what they call the Impatiate tax regime, where a certain percentage or a certain portion of your income will actually be shielded from French taxes. So given that factor, given that planning opportunity, your effective tax rate could be, in certain circumstances, lower in France than in Portugal. So if you're an employee with a multinational group, have a look at that Expatriate tax regime. Number 2, wealth taxes. I've covered this in other videos as well as we've written about it on our website, HEJ.tax. But France does have a wealth tax, but Portugal does not. So again, depending on how your wealth is structured and where your investments are, you can be subject to the wealth tax in France, whereas that's not something you have to worry about in Portugal. So the applicability of the wealth tax to your situation is another factor for you to consider. The third factor to consider is inheritance taxes. France has an inheritance tax. Portugal, generally speaking, does not. It has stamp duty, but generally speaking, it does not have an inheritance tax. So again, depending on your family situation, the applicability of the inheritance tax may be something to consider, as well as forced heirship rules, which may or may not be a tax factor, but it is part of planning for your legacy and your overall estate planning. So again, the applicability of the inheritance tax is something for you to consider. Number 4, generally speaking, France does not have any special tax regimes, any special tax carve-outs. We mentioned the Expatriate tax regime earlier. I think that was the first factor. Portugal does have a variant of that. Historically, did have something called the non-habitual resident tax scheme, which no longer applies. However, one way in which Portugal may have a tax advantage over France, depending on your situation, would be the applicability of a new regime that has been established. This new regime is called the IFICI program. And the IFICI is a Portuguese word. It stands for Incentivo Fiscal, Investigação Científica e Inovação. What it means is that if your company is involved particularly in some sort of scientific research, so basically R&D, research and development, it's kind of geared in that direction, then your company may qualify for certain incentives. And because your company would qualify for those incentives, foreign talent that comes in to work for that company may also qualify. And specifically, it may mean that income that arises from outside of Portugal will not be taxed in Portugal, even if that income is remitted into Portugal. So again, depending on your circumstances, depending on your company, this can be a huge opportunity to consider and to explore. Number 5 would be the treatment of trusts. Generally speaking, the way trusts are constituted and considered from a tax point of view and from an asset protection and so on, that point of view in common law jurisdictions, it may not necessarily apply in either France or Portugal. In Portugal's circumstances and the way it's structured in Portugal, it just simply doesn't exist. So it'll be completely looked through. And if you have underlying investments, they will be taxable to you as if the trust did not exist. There's a bit of an exception in Madeira, but then that would apply for those who are not, you can use a Madeira trust structure, but not if you are resident in Portugal. So that's that. France, I believe that they did sign the Hague Convention on Trust, but they may not have ratified it, which means that, again, you'd need to check with a specialist advisor as to how your trust will be treated in France. But I think what many of our clients not struggle with, but they recognize that it is a big obligation and responsibility, is there's an onerous reporting requirement structure for foreign trusts for French tax residents. And failure to, dot the I and cross the T's in terms of that reporting requirement would lead to pretty aggressive penalties. So you'd want to pay special attention if you intend to move to France and you have a foreign trust in play. And number 6, blacklisted jurisdictions, otherwise known as non-cooperative jurisdictions. Obviously, at the EU level, there's a blacklist, but I'm not talking about the EU level. Individual jurisdictions within the EU may have their own blacklist. France has its own blacklist, which is separate from Portugal. So if it is, you're moving to either one of those two jurisdictions and you have a structure which may incorporate jurisdictions on those respective blacklists, it's something to, be considerate of, and perhaps you may need to restructure in advance of your move. Particular attention needs to be paid to Portugal. They have arguably one of the longest lists of non-cooperative jurisdictions that I've ever seen. Basically, any island, any one of the normal sunny tax attractive jurisdictions you could think of, it's probably going to be on that blacklist. So both jurisdictions, if you're going to move to France or Portugal, pay attention to the blacklist, but especially Portugal, because they have arguably one of the longest lists of non-cooperative. Okay, so that's it. So if you plan to move to either Portugal or France and you need any help with pre-immigration tax planning, please feel free to reach out to us at hgj.tax. My name is Darren Joseph, and I'll see you next time.